Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. We've got some very important information to get into. It's going to make your head spin, let me tell you. The first thing I want to look at is, what did China know? There's a lot that has been going on right now, and the news cycle, the way it works, we forget about what happened, not to mention last year, but last week. Even yesterday sometimes. I'm going to show you something really, really important. The second thing is how the markets have spiraled down and what could come here in the coming days and weeks. And the third thing is the shrinkflation, something we've talked about many times before. I'll get into all of that and more. Let's begin right here. This is so key to understand. This particular Russian producer of oil had allowed Chinese buyers to receive oil without providing guarantees known as letters of credit, LC. In order to bypass the Western sanctions, this is what they have done. Think about this. They found their way around, at least temporarily. The change in terms is allowing this company to continue to sell their particular blend of crude from the port of Kosmino in Russia's far east to China, the world's top oil importer. So you know that China has this massive, voracious appetite for commodities, particularly oil, and you see they found a way to continue to bring that through. Okay, so they're just showing you here. Looking at this, Western sanctions in response to the invasion, which Russia describes as a special military operation, have led banks to halt the issuance of LCs for all oil that originates from Russia. China has repeatedly voiced their opposition to the sanctions. To get around the restrictions, Chinese companies are using open accounts that allow the customer to buy goods on a deferred payment basis, with the requirement to pay up to a full 3 days after the cargo is loaded. It was not immediately clear which banks were involved, so we don't know that yet. But we do know, at least in this limited scenario, how they're skirting around the sanctions. This is so, obviously China wants to do business with Russia, and they don't want to have to deal with these sanctions. A letter of credit, which allows 30 days for payment and is backed by a bank, is seen as the strongest guarantee for both sides. You know what they want. You know what is coming here. And I think it's really key that we pay attention to the developments here, not just for this, but everything that goes on with China. And that brings me to this point. This was back in 2021. I brought it up to you previously. I'm bringing it back again. One reason for rising food prices: Chinese hoarding. Keen to avoid shortages and reduce dependence on imports, the government is stockpiling goods on a massive scale, as well as this. China hoards over half the world's grain, pushing up global prices. Testy ties with the US and Australia could be prodding China to boost food reserves. So the term, hoarding, I don't think is a good term at all. Because if you and I want to buy a whole bunch of rice and beans because we're worried about our future, well then, I don't consider that hoarding, but that's a whole different story. The point is that they have a considerable amount of food, and they've been doing that last year and prior. It's almost as if they knew that there would be a crisis. They knew that there would be tensions. They knew that they would be unavailable to make purchases and so on. You don't just do this for no reason. You're talking about billions of dollars here. It's not you and I buying, a couple $1,000s worth of storable food. No, it's on a mass scale. So when we look at this, we have to start asking, what did they know, if anything? I don't know. I don't know. But what do you think? I want to know in the comments down below. Do you think they had some sort of insight, or at least for the potential of something to happen? Russia's invasion of Ukraine will benefit China. Literally, that's basically all I wanted to show you with this article out of oil price. But you have to understand here, the victor out of all of this is always going to be China. Because they're going to stay as far out of it as they can while still maintaining the friendships and being peaceful to those who are, on the opposite side. So they're just going to be the benefactor, the beneficiary from all of it. China has in recent years become increasingly isolated on the global stage and was considered a major foreign policy concern for the US and allies. So now you've got Russia at the forefront. Oh, everybody's looking there. China, behind the scenes, could be taking some actions. Flour rationing in Lebanon, grain hoarding in Hungary, how the Ukraine war is lurching the globe toward a new food crisis. I've been warning about this, and I do not care if people are unhappy that I keep bringing it up and that people are unhappy about, they're going, I just need the next hot stock. I just need to know what to buy. What ticker do I look at? I'm not interested in that kind of thing when we have got something that is so important to us, literally, potentially life and death. Get your food situation in order as best you can. If that means buying a whole bunch of cans of beans, that's great. Do that. If you want some, dried lentils and dried beans and dried whatever, get that. Make it happen. Doesn't need to be fancy. In fact, I'm planning on doing a video of a way to seal mason jars. That's very simple, but I mean, people know this stuff, and there's different ways to do it, of course. But we need to start doing these things if you're not doing it already. Steal those things, getting a bunch of mason jars, putting them in there, storing them in different gallon containers, 5 gallons, I believe those are, and then putting your oxygen absorbers. Anyway, I'm going way off track, but you know what I mean. Get your food situation in order. That's all I'm trying to say. UN agency warns that the Ukraine war could trigger 20% food prices rise. It's already there. It's already there, and I'll show you at the end of this video how that is already far beyond that. Stay tuned. Hit that thumbs up. Don't forget, it's right down there, okay? Support the channel. Russia sought on Thursday to retaliate against Western sanctions imposed over its invasion of Ukraine by banning exports of certain goods and agricultural commodities. Exporting telecom, medical, auto, agricultural, electrical, and tech equipment, as well as some forestry products, will be banned at the end of this year. This is extremely, we're starting to escalate here on a different level. Now, maybe the US isn't sending planes over and, ICBMs and all these different things aren't happening yet. But when you start to see these things happening one after the other, it's real concerning. I think everybody should get wise to what's happening here today. Now let's look at what's happening right now with the spiral. Spiral down. Shockwaves spread as Europe's economy reels at the energy fallout. Cost and supply squeeze impacts businesses around the region. I don't know what to do if war persists, according to the Spanish farmer. So you see the prices rising. That's affecting people directly. Energy, food prices, you know that. But it's also affecting the stock market, particularly, it's everywhere. But the stock market in Europe is taking a beating. In fact, in China as well. Looking at this, here's the oil price at the time of this recording, approximately $109 a barrel. It peaked out at nearly $130 a barrel, just about. And so we can see how the mass fluctuations, but looking at where this was even as early as late February, it's sitting at this range of in the 90s, and it spiked up to today's numbers, like $20 a barrel. If you don't even factor in how it hit 130, $20 a barrel move in such a short period, that does a lot of damage. It does, because of how important oil is as a commodity. So here you're looking at where the projections are of the ECB and the Eurozone. I just think it's funny. I always think it's funny. I love those projections. If you want to laugh, some people watch like a comedy, Netflix or whatever people get their comedies from. I just look at the projections because it always gives me, a deep chuckle, a real good deep chuckle. It's more than just natural gas. Value of imports from Russia, Belarus, and Ukraine in the categories that they dominated in 2019 and 2020. And you could look at this, okay? Just showing us these countries are dependent on, I mean, like everywhere in Europe. Like just take the example of Germany that relies heavily on Russia. And with, I think a lot of this really came up as soon as they said Nord Stream 2 not going to happen. It seemed like it was like days later where all of this just kind of spiraled out of control. And none of this does bodes well, like none of it really is positive to the stock market. Okay. Like it's not. You want stability and calm. Look at 2017 as a perfect example. The word Goldilocks was in every single article I showed you, just one after the other, after the other, after the other. Goldilocks, Goldilocks, and it was just month after month of fantasticness. The entire year, nothing bad happened, according to the media. That's what the market needs. And you had this steady, slow and steady. Well, it wasn't quite slow, but it was a steady increase. There is a growing threat that rising inflation will overwhelm the nation's strong economic recovery, resulting in a recession. A recession would be very damaging, not just to the stock market, but of course, when you look at, on a deeper level, when we look at all these pieces of, leading up into this point here, leading up into where we are today, like everything has been riding on the fact that no, we'll never go into a recession again. All of that. What happens when it actually occurs? You're gonna have max pain. Let me tell you. Inflation-adjusted oil prices and events. It's just showing you right here that it's right what we're living through right now. Already one of the highest levels. So this is going to be written about in the history books. We know that to be the case. Right here, I can show you what's happening in the stock market. It's the largest outflow ever from European equities. Ever. And because of obviously how they're directly exposed. Credit cracking, you could look at this, just showing us investment grade and high yield bond flows into the negative haven't been this low since March 2020. Okay, and right here, DD plunges 44% after halting planned Hong Kong stock listing. So you saw all the restrictions that were taking place with the US saying, China's basically saying, you're not going to be able to do your listing in the US. We're going to pull it off. We're going to shut you down, all of this. And the tech stocks in particular in, Chinese tech stocks listing in the US as well as in China, all of them just got real punish, okay? And then people were trying to buy the dip, and it just kept going lower and lower and lower, and they got slaughtered. And this is just one example. More recently, you got to watch out when it comes to buying the dip. Okay, you got to know where that bottom is, at least somewhat. Nobody's perfect, but just look at that. Absolutely slaughtered. If you look at the axis on the left side, that is the China Internet ETF, currently at 2673. Its peak was over 100, and that was in 2021. How does that sound? That's not even a dead cat bounce. I mean, we're not even, that's just falling. That's a waterfall. That's just a cliff. Shrinkflation, here we are. What is the meaning of shrinkflation? Some people think that I made this up. Of course, I didn't make it up. It's just something, you go and you get, which we'll talk about in a second, chips. Inside the bag of chips, mostly air. Yes, I realize part of that is transportation. To make sure that doesn't become a powder by the time you get to it. But let's be honest, the amount of air in the bag has been growing and the amount of chips in the bag has been shrinking over the years. At the same time, the prices of those products have been increasing. But shrinkflation is essentially we'll charge the same price, but we'll put less contents in there. And I have heard from you literally all over the world telling me, oh, I used to get this product. It now went from, let's say, 16 ounces to 12 ounces. I used to get this thing and it's this much and it's that much all the time. That's what shrinkflation is, okay? I don't need to explain it to you over and over again. But here's just a few examples. Looking at Bounty. Okay, Bounty, 165 sheets down to 147. Look at this, Doritos, 5 fewer chips per bag. That's not that much, but if you think about 5 chips out of millions of bags of chips, that starts to add up for the company. And they say, like literally the quote is, it's in here. The quote says, we get to charge you the same price and you still get to enjoy your product. Yeah, but I'll enjoy it. Not that I would eat that, but not that, like I'll enjoy less of your product. I mean, is that really? I mean, really? What are like I understand the reason why these companies do it, but we need to realize something. We're getting less of what we had before. I mean, that's just the way it is. This is inflation, shrinkflation, call it whatever you want. It's your currency losing value. We know this. We know this to be the case. So what can we do? Obviously, I talked about it previously, talked about it 1,000 times. Again, just check, for those who haven't read my books, you could check out my playlists. I've got multiple playlists on the channel, one being the how-to and solutions. That's my most popular playlist. I got all kinds of stuff in there, okay? That's just the easiest way for me to say it. If you support the channel, if you want to, think that this video is worthy of it, you can hit that thumbs up. I do appreciate that very much. And if you're not subscribed already, you got to join the the most data rich channel you can find out there. Okay, no political bias, no opinions. It's data for you every single day. So you can subscribe to that, hit the thumbs up. I appreciate that, and I'll see you on the next one.